Well, it was probably a strong ever nod to September, as we could have expected from Fed Chair Powell. And, what's interesting is he clearly pivoted to focus on the labor market weakness. And we saw that once again in the conference board, for example, we saw that the labor market differential, meaning the jobs that are plentiful versus hard to get, that continues to narrow. So that suggests that labor market weakness. The other thought that I thought was interesting from Jackson Hole is that while inflation is surely likely to spike in the coming months, they're willing to look through that. And part of the reason for that is because they don't expect it to be sticky. They don't think this is going to be systemic. They don't think it's going to be structural. The reason for that is actually that weakening labor market. And, if you're trying to raise prices into a weakening consumer or into a weaker jobs market, you're likely not going to be successful. And so that's becoming part of the Fed narrative as well. So I think it is a layup for September. I mean, barring just a huge upside surprise on payrolls, which I don't expect, or, barring, I would say not only a spike in inflation, but a spike in inflation expectations. And I don't think we're seeing that.
Do you agree with that view from the Fed right now? I mean, of course, we know about this dual mandate. It's about stabilizing prices, bringing down inflation, and of course, maximum unemployment. Or maximum employment, excuse me.
Yeah, I do actually very much agree. I do think the inflation story, the tariff-related induced inflation, is a one-time step up higher in the price levels. And I very much agree with the argument that you don't have the labor market strength in order to be able to fully pass through those increases. The other thing I would say, if you look at companies, including our portfolio companies, they're using a mix of tactics in order to deal with tariffs. Some of them are passing through all of the cost increases, for example, in the data center space, because they can. Some of them are passing through partial cost increases. They're working with suppliers to absorb some of those tariff-related increases as well. And some of them are shifting supply chains. So for that reason, I don't think we're going to see a huge spike in inflation as it could have been in the coming months. So that's the first part that I agree with. The second part I agree with is the labor market is clearly weakening. And I would say it's sort of, I don't want to say the precipice, but I'll call it, it's sort of on edge. It's sort of on this edge. And if you tip it over, you're going to tip it over into weakness. If you look at the unemployment rate of 4.2, likely going to 4.3%. If you look at the layoffs, we're just this close to actually slipping into outright potential negative job growth. And by the way, I mentioned that if companies are not passing through the cost increases, what are they doing? They're absorbing that in their margins. So that's why the labor market in turn is again on this edge. So I do very much agree, and I hope we see a rate cut in September. I do also see scope for a couple more this year.
Other than technology, what screens well for you guys these days? I don't know if you do it by industry sector, by factor. How do you guys try to find some opportunities?
We do it by theme and also, of course, by industry sector as well. But when I think about some of the themes that we're excited about is clearly the digital transformation and the many sectors that it touches. We're also investing along the sustainability theme as well. And finally, this notion of new living. The way we consume, the way we take care of ourselves, the way we exercise, the way we live, it is all very different today. And in many ways, it's tech-enabled. Further, I would think of it in terms of different sectors within sort of the private market space. And it's goods and it's services, it's goods and products, it's technology, and it's also health and healthcare sciences. And so we're finding a multitude of opportunities along all four of those.